Hey everyone, Dan here. We are just after market close on Thursday, June 3rd. We are going to take a look at SoFi and the update as I see it on the potential for a short squeeze. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's jump right in. So, a couple of things. So, obviously, it was a more challenging day today than we've seen in the past, I don't know, week or 2 weeks leading up to this. But it spent most of the day in this channel and then had a really hard time holding this. I would say that the hard time really started around 3:30. And, we got some additional pressure coming in and got pushed down here. Good thing is, it got caught by this like 2267 level, which if you see that ties back to earlier support in the day. And then I did have already on the chart this, well, the price is right there right now, so I don't. 2263, I had already plotted that out as support because of previous activity here and even further back. But, I'm not terribly discouraged by what I saw today. I still think that the most important thing for us to do at the moment is get this price to stabilize out and then get some bullish momentum back. Now that might sound super obvious, but the reason is, we need to continue to put pressure on the short sellers to close out their positions. And not only that, but we need them to do it in mass. And, with the recent additional shares that have come into SoFi since the merger, and, the potential for insiders to start selling down the road, I think it's sort of like a now or never kind of situation, in my opinion. So I do think the next few days will be really telling because for the period of time in which there's all this hype leading up to the merger that helps push the stock higher, a super high fee to borrow the stock, which, we'll go over that in a second, and the percentage of the float being so high that's being shorted, those things all accumulate just in this very particular period of time, initiated because of the big price run up ahead of the merger. And so to the extent that that can or cannot be sustained right now is, again, in my opinion, going to make this or break this over the next few days. And so if it breaks it, we'll see obviously these support levels not being able to hold, people kind of locking in whatever profit they can, and it'll sort of like get pushed down further. The dilution will come into play, and the short sellers will just sort of like have a field day with this one. On the other hand, we can get some green days going. Again, if we can get a big green day tomorrow, that would be obviously the best case scenario, but that could set us up for big pushes on Monday and Tuesday. I think if we can get a solid 2 to 3 days of strong green action on this one, I think we're back in play. And I think, that's obviously the best potential outcome for the bulls. At the $25 level, I know it feels like we're very far from that now, but again, getting to that $25 level, I do think is key to consume a bunch of the short sellers, sort of force them to close out their positions that they took yesterday, which caused this afternoon dip after we tried to push up in the early market hours. If we look at the data, we do have some updated stuff that's come in here. So this is as of 4:15, since we're after a close. So there's some sort of like mixed news here. So let's look at the day in total. So we started off the day here, about 140% fee to borrow, 100,000 shares available. Keep in mind when we're looking at this, this is iborrowdesk.com. This is like an app that this person built that gets a feed from interactive brokers. So just keep in mind this isn't all of the shares available across all of the brokers. This doesn't account for any of the dark pools either. So this is just a snapshot of what's going on at one of the larger brokers. What we can dissect from that or glean from that is essentially getting a concept of what short sellers are encountering with other brokers as well, fees that they're incurring, and availability that might be sort of like suppressed or abundant. And so this sort of services that function for us. But just keep in mind the pool of shares to borrow bumped up the day of the merger, and it was here at like 30. I can't remember if it was 3.3 or 3.4 that it started at right when the merger happened. It also took a day or so for this web app to be picking up the stats, so it's a little hard to tell. But in any case, it opened up today and immediately was down to just 100,000. So a ton, just this broker alone has had well over 3 million shares get borrowed out to short sell into SoFi. And we saw no one really closing out here. And then around 11 o'clock today, someone, closed 100K shorts. And then another 100K came in at about 1 o'clock. And then a little borrowing, a little closing. And all that as the fee is also sort of like jumping around a lot. So 140 held until about 10 a.m. And then by 10:15 it was down to 87. Remember, this a few days ago was 261. So 87, then it had a little nudge up near 100, and now it's falling back down into the mid 80s again. I still think that fee still plays a significant role because it's still very, very high, comparatively speaking. We talked about Workhorse earlier today in a different video, and that fee is low single digits, like 3-4%. And folks think that may have the potential to short squeeze. So, this fee it far outsizes that, obviously. So bunch of shorts jumping in early in the day, and then a few closing out probably as the price got driven down and they were able to lock in some profit and not continue to incur the high fee. And this is essentially what is just sort of like going to happen. I talked about this in the Workhorse video as well, but it's relevant here. Just keep in mind that as this price increases, the extent to which the short sellers are comfortable risking the additional capital to borrow more shares to short, that is their way of essentially averaging down. Just like if you go long in a stock, if you bought this yesterday at 24.46 and then you saw it fall toward the end of the day and you bought more at 23.10, essentially what you did is you lowered your cost basis, right? Your average cost per share went down, and so you then have it's much quicker for you to get back to the upside when the price starts to rise. Same idea happens for short sellers. If you borrowed something down here at $20 and then you had it rise all the way up here to $24.50 and you borrowed more, now let's just pretend let's say it's 25. What didn't get to 25? So $24. So you borrowed at 20 and then you borrowed at 24, and just say you borrowed the same amount. Your average is now 22. So you only need to get the price under 22 plus whatever you need to cover your fees in order to close your position profitably. So this is just to say, as the price rises, yes, we're trying to force a squeeze, but what's first going to happen is more short sellers are going to jump in and borrow shares because it's their way of averaging down and getting themselves potentially better positioned to close out at a profit without needing the price to go all the way back down below 20. Now it just would need to close, or they would need to close their position when it's below 22. So keep that in mind. So we're still very much in that phase. We're still very much in the phase of push it up, bring more short sellers in because they'll think it's overextended, this momentum can't keep building, so it's going to drop eventually, and this is going to help me sort of de-risk my position a little bit. So you're taking on overall, a higher dollar amount, just like when you average down in stocks, but your cost basis changes, and so you have your exit strategy then gets a little bit more. There's a little bit more potential to exit out profitably. So we see that exact thing that I just described. As the price is rising up, we see short sellers first pouring in. So the ratio yesterday jumped all the way up to almost 36 from 23-24 the day before, even with the huge increase in volume. And so, that again, to me, it says this is just the phase of this that we're in right now. But all of this will be predicated on whether or not the price can be continuously pushed up to put really, really strong pressure on these shorts. If the pressure sort of comes off because the fee dies down and the price stabilizes out or drops, then they're going to be closing positions, but they're going to be closing them profitably. And it definitely isn't going to help any of the bulls in that scenario. So that's what I wanted to look at over here. Let's give this a quick refresh to see if today's data is in here yet. I doubt it, but no, I don't think so. No. Okay, the ad's back, but nothing changed. So basically, that's sort of like the situation as I see it currently. I think that that's the stage of the game that we're currently in. The other thing that I would point out is the vol. Let me just do it this way. Go to the daily, hover over today. Let's see what the volume was. So the volume, well, yesterday, when we talked about this yesterday, was 14.6 million. Today, only 5.7 million. So the other thing that SoFi really, really needs, as a bunch of other stocks and tickers are getting a lot of attention, it needs that attention too. People need to be interested in what's going on with SoFi, whether it's that they're actually interested in the company or they're interested in the potential for a short squeeze or what have you. But, the idea that we need volume to come in so that there's buying pressure entering the market and pushing this up is very, very, very true. And so to have today be about a third of what the volume was yesterday definitely doesn't help the bullish case. So this is why I do think tomorrow, which is Friday, and then next Monday, Tuesday will be very, very telling. If we can put 3 back-to-back really strong green days together, I do think we sort of like continue that trajectory of more shorts coming in because they're trying to sort of average their position down, and then they're going to be at some point just cornered because the availability is going to be too low, the fee is going to be high, the price keeps rising, and sort of like how many days do they really want to hold this for with all those factors going against them, and they'll sort of like be forced to close their position en masse and at a big loss. And so that's the position that you want to be in if you're bullish on this. So I think us getting 3 back-to-back days doesn't get us to that end point, but it gets us back on the right path where the shorts start pouring in again. So it'll be interesting to see how much they poured in today, given this, relatively speaking, pretty flat day that we saw. All right. Well, I will, of course, send out an update on this again tomorrow. Tonight, when the data comes out about the short volume ratio from today, I'll put that on Twitter, and we'll go from there. But I'll keep tracking this one, and I'll continue to be transparent with you all, including sort of like if and when I think that this is no longer a viable opportunity, or what have you. But for now, I'm looking for a green Friday, big green Monday, big green Tuesday, put the pressure on, draw more shorts in, and let's sort of like get back on what should we do? We should get back in the manufacturing plant to build the rocket. This is how you build the rocket. All right, this is a stupid analogy, but it's late in the day and I'm tired and I'm still a little under the weather from my allergy situation. So anyway, thanks for watching, and good luck with whatever you're trading this week. We're almost to the end, and I will see you in the next video.